The financial revolution is here. Imagine a world where you can borrow, lend, trade, and invest without banks, middlemen, or restrictions. That's the power of decentralized finance, DeFi. DeFi is reshaping finance, giving power back to the people through blockchain technology, smart contracts, and decentralized applications. But how does it actually work? How can you profit from it? And what risks should you watch out for? Stay till the end, because we're breaking down how to make money in DeFi, the biggest projects to watch, and key strategies to avoid scams. Let's dive in. What is DeFi? The new era of money. Traditional finance has been the backbone of global economies for centuries, but it operates within a centralized system controlled by banks, governments, and large financial institutions. This centralized control means they dictate who gets loans, banks require credit checks, income verification, and collateral before approving loans, making it difficult for millions of people worldwide to access financial services. Who can invest? Many high-yield investment opportunities are limited to accredited investors, requiring individuals to meet strict financial criteria. What fees you pay? Banks and financial institutions charge transaction fees, account maintenance fees, foreign exchange fees, and other hidden costs that eat into your earnings. This traditional financial model excludes millions of people from accessing banking and investment opportunities, especially in countries with underdeveloped banking infrastructure or restrictive regulations. How DeFi changes the game. Enter Decentralized Finance, DeFi, a revolutionary system that removes the middlemen and puts financial control back into the hands of users. DeFi operates on blockchain networks like Ethereum, Solana, and Binance Smart Chain, using smart contracts, self-executing pieces of code that automate transactions without needing third-party approval. This means no more gatekeepers. Anyone with an internet connection can access financial services. No approvals needed. You don't need a bank's permission to borrow, lend, trade, or invest. Full transparency, transactions are recorded on the blockchain, making everything verifiable and trustless. In simple terms, DeFi offers be your own bank. You control your assets without needing a centralized institution. 24/7 access. DeFi platforms operate around the clock, unlike traditional banks with limited hours. No restrictions. You can send, receive, and manage funds from anywhere in the world. Lower costs. Transactions are processed without expensive middlemen, reducing fees significantly. Financial freedom. Anyone, regardless of nationality or financial status, can participate in DeFi services. Unlike centralized finance, CFI, where banks control transactions and impose regulations, DeFi runs autonomously, ensuring users have unrestricted financial access at all times. At the heart of DeFi lies smart contracts, self-executing code stored on the blockchain that automatically enforces agreements without human intervention. For example, if you lend crypto on a DeFi platform, the smart contract ensures that you receive interest payments without requiring a bank to manage the process. If you borrow assets, the smart contract locks your collateral and releases funds based on predefined rules. When you trade on a decentralized exchange, DEX, the smart contract executes your order instantly and securely without a broker. These smart contracts remove counterparty risk, meaning transactions are trustless, automated, and secure. One of the most powerful aspects of DeFi is permissionless access. Unlike traditional banking, where institutions require KYC, know your customer verification, income proof, and credit history, DeFi allows anyone to participate. This is especially transformative for the unbanked population. Millions of people who lack access to basic financial services due to economic or regulatory barriers. With DeFi, a farmer in Africa can take out a microloan without a credit score. A freelancer in Asia can invest in high-yield assets without going through a financial institution. A crypto trader in South America can earn passive income through staking and lending without needing a bank account. This level playing field makes DeFi a truly global financial revolution that removes barriers and increases accessibility for everyone. Imagine this scenario. You have $1,000 worth of Ethereum, ETH, sitting in your wallet. Instead of keeping it idle, you decide to put it to work using DeFi. Here's how you can maximize your returns in a permissionless, decentralized way. Lending and borrowing. You deposit your ETH into a DeFi lending protocol like Aave or Compound, where borrowers pay interest to borrow your funds. You earn passive income without doing anything. Yield farming and staking. You stake your ETH into a liquidity pool on a decentralized exchange, DX, like Uniswap or PancakeSwap, and earn high APYs, annual percentage yields. Decentralized trading. Instead of using a traditional exchange like Binance, you trade ETH for other tokens on a DEX, eliminating third-party fees and restrictions. Stablecoin loans. You use your ETH as collateral to take out a stablecoin loan, like DAI or USDC, allowing you to reinvest in more crypto without selling your original holdings. Every step of this process is fully automated by smart contracts, meaning no banks, no approval process, and no delays. Just instant financial transactions powered by blockchain. One of the biggest frustrations with traditional finance is the high cost of banking services and slow transaction speeds. Banks charge fees for wire transfers, foreign exchange transactions, account maintenance, overdraft, and late payments. In contrast, DeFi eliminates most of these fees by operating on peer-to-peer blockchain networks. Instant transactions, no waiting for banks to process payments. Low fees. DeFi transactions cost pennies compared to traditional banking. No hidden costs. Everything is transparent and verifiable on-chain. Instead of relying on banks to process payments, which can take days for international transfers, DeFi allows instant transactions with lower costs and no middlemen. DeFi is revolutionizing finance by providing a more inclusive, transparent, and efficient system that empowers individuals, removes intermediaries, operates globally, and increases financial innovation. The future of money is decentralized. Traditional finance is built on trust. Trust in banks, governments, and institutions to manage our money. But history has shown that this trust can be broken through economic crises, inflation, and banking failures. DeFi offers a transparent, trustless alternative that removes the risks of centralized control. As DeFi continues to grow, we're seeing more traditional investors moving into DeFi, institutions integrating blockchain finance, and new DeFi applications emerging for lending, insurance, and asset management. This is just the beginning of a financial revolution that is reshaping the global economy. Decentralized finance, DeFi, is transforming the financial landscape by eliminating intermediaries, offering permissionless financial services, and enabling trustless transactions. Unlike traditional banks, DeFi allows users to trade, lend, borrow, and earn passive income, all powered by blockchain technology and smart contracts. Let's break down the key components of DeFi and explore how they work in real-world scenarios. Decentralized exchanges, DEXs, remove these barriers, enabling users to trade cryptocurrencies directly from their wallets without needing a centralized authority. Popular DEX platforms include Uniswap, PancakeSwap, and Curve Finance. Instead of traditional order books, which match buyers and sellers, DEXs use liquidity pools, smart contracts that allow users to swap assets instantly. Liquidity providers, LPs, contribute funds to these pools in exchange for a share of trading fees. Traders swap tokens directly from the liquidity pool, ensuring seamless automated transactions without third-party control. Smart contracts execute transactions instantly, reducing delays and eliminating reliance on centralized exchanges. Why DEXs are revolutionary? No registration needed, full control over funds, and 24/7 global access. Real-world example. Imagine you want to swap Ethereum, ETH, for USDT, Tether. Instead of using Binance, where you'd need to create an account, submit KYC documents, and wait for approval, you simply connect your wallet to Uniswap, select the tokens you want to swap, confirm the transaction, and the smart contract automatically processes it. In seconds, your ETH is swapped for USDT without needing a centralized exchange. Yield farming and liquidity mining in traditional banking. Saving money in a bank account earns minimal interest. DeFi flips this model by offering APYs ranging from 5% to over 100% plus, depending on the protocol and risk level. Popular yield farming platforms include Aave, compound, and yearn finance. Instead of keeping your crypto idle, you can stake it into DeFi protocols and earn rewards in the form of additional tokens. Example 1. Lending on Aave. You deposit 10 ETH into Aave's lending pool. Borrowers pay interest on the borrowed ETH, and Aave distributes a portion of this interest to you as passive income. Example 2. Liquidity mining on Uniswap. You provide equal amounts of ETH and USDT to a liquidity pool. Traders use this pool to swap ETH for USDT, and you earn a percentage of the trading fees as a reward. Why yield farming is profitable? Higher returns than banks, passive income opportunities, and compound growth. Risks to consider: impermanent loss, smart contract vulnerabilities, and rug pulls and scams. Not all DeFi projects are legitimate. Stick to trusted, well-established platforms. 3. Lending and borrowing. The future of banking. Without banks, traditional lending systems require credit scores, collateral, and bank approval, often excluding millions of people from accessing financial services. DeFi removes these barriers by enabling instant, permissionless borrowing and lending. Popular lending platforms include Aave, which offers flash loans, over-collateralized borrowing, and high-yield lending options. MakerDAO, which allows users to mint DAI stablecoins by locking up ETH as collateral, and Compound, which enables decentralized lending and borrowing with algorithmic interest rates. How DeFi lending works. Instead of applying for a loan through a bank, you can borrow funds instantly by depositing crypto as collateral. Example 1. Borrowing stablecoins on MakerDAO. You deposit 5 ETH into MakerDAO's smart contract. The protocol issues DAI stablecoins equivalent to 50% of your ETH's value. You can use the borrowed DAI to reinvest or trade while keeping your ETH intact. Example 2. Flash loans on Aave. Flash loans allow users to borrow without collateral, as long as they repay the loan within the same transaction. Traders use flash loans for arbitrage trading, liquidations, or refinancing debt. Why DeFi lending is disruptive. No credit checks. Your borrowing power is based on collateral, not credit scores. Instant loan approvals. No need for paperwork or lengthy approvals. Flexible repayment terms. Borrowers can repay at their own pace without strict bank deadlines. Risks to consider: liquidation risk. If your collateral's value drops too much, your assets can be automatically liquidated. Volatility. Crypto price fluctuations affect loan stability and collateral value. 4. DeFi insurance. Protecting your investments. Just like traditional banks offer deposit insurance and fraud protection, DeFi is building security layers to protect users from hacks, exploits, and smart contract failures. Popular DeFi insurance providers include Nexus Mutual, which covers smart contract vulnerabilities, exchange hacks, and protocol failures. Cover Protocol, which offers decentralized insurance policies against rug pulls and system failures. And Unslashed Finance, which provides coverage for exchange hacks, slashing risks for stakers, and Oracle failures. How DeFi insurance works: users can purchase insurance coverage for specific DeFi protocols to protect their investments. Example: insuring your funds on Aave. You deposit crypto into Aave for lending. You purchase insurance from Nexus Mutual to cover potential smart contract failures. If a hack or exploit occurs, you receive compensation for your lost funds. Why DeFi insurance matters: protects your crypto assets. Insurance helps users recover lost funds in case of hacks or vulnerabilities. Boosts trust in DeFi. Security concerns are a major barrier to mass adoption. Insurance adds an extra layer of protection. Mitigates risks for yield farmers and liquidity providers. Those providing liquidity or staking assets can safeguard against losses. Risks and limitations. Coverage is limited. Not all DeFi protocols are covered, and payouts depend on governance decisions. Policy costs. Premiums vary based on risk levels and protocol reputation. Why DeFi is a game-changer. Decentralized finance, DeFi, is reshaping the financial landscape by removing middlemen like banks, governments, and financial institutions. It gives users complete control over their money and opens up borderless financial opportunities. Let's dive into why DeFi is truly a game changer. 1. True financial freedom. Traditional finance is restrictive. Banks and governments decide who can access financial services, who qualifies for a loan, and how much interest you earn on savings. DeFi changes this by making finance permissionless and decentralized. No government control. Governments and central banks control fiat currency. They print money, manipulate interest rates, and impose restrictions on transactions. With DeFi, there's no single authority controlling your money. Example: in countries facing hyperinflation like Venezuela or Zimbabwe, people turn to crypto and DeFi to protect their wealth from devaluation. No banking restrictions. Banks require KYC verification, impose withdrawal limits, and restrict access based on location. DeFi, on the other hand, is accessible to anyone with an internet connection. No restrictions, no approvals needed. Example: a freelancer in Nigeria can use DeFi platforms like Aave or Uniswap to store, invest, and transfer money without needing a bank account. No censorship. Governments can block access to financial services in certain regions. DeFi operates on blockchain networks like Ethereum and Binance Smart Chain, making it impossible for any government to shut it down. Example: in 2022, Canada froze bank accounts of individuals supporting protests. DeFi allows users to store funds securely without relying on banks. With DeFi, you have full control over your assets. No government or institution can freeze, block, or restrict your financial activities. 2. High-yield opportunities. Traditional banks offer low returns on savings accounts and investments. DeFi offers significantly higher APYs through staking, lending, and yield farming. Traditional versus DeFi APY. Bank savings account, 0.01%, 1% APY. Stock market, S&P 500 average, 10% APY. DeFi yield farming and staking, 5%, 1,000% plus APY. Why does DeFi offer higher yields? No middlemen. You earn directly without banks taking a cut. Liquidity demand. DeFi platforms incentivize users to provide liquidity by offering high rewards. Crypto volatility, higher risk, higher potential rewards. Example: Aave and compound lending. Banks give you 0.1% APY for holding cash. Aave and Compound offer 5%, 20% APY for lending stablecoins like USDC or DAI. Risk warning: high APYs, R's high risk. Smart contract failures, rug pulls, and hacks can result in losses. Always use audited DeFi platforms and diversify investments. If you're looking to maximize returns, DeFi provides endless opportunities, but always manage risk wisely. 3. Borderless transactions. Traditional banking is slow, expensive, and geographically restricted. DeFi enables instant, low-cost transactions anywhere in the world. Fast and low-cost transactions. Bank wire transfers, 3 to 5 days and $20-$50 fees. Western Union, 24 hours and 5 to 10% fees. DeFi transfers, seconds to minutes and near zero fees. Example: international money transfers. A worker in India wants to send $500 to their family in Canada. Bank transfer takes 3 to 5 days with high fees. DeFi transfer, USDT on Polygon, takes seconds with a few cents in fees. DeFi is a global financial system. You can trade, invest, and earn across any country without needing a bank account. This is especially useful for unbanked populations who previously had no access to financial services. 4. Full transparency and security. Unlike banks, where transactions are hidden and controlled by centralized authorities, DeFi is built on public blockchains. 100% transparency. Every transaction is recorded on the blockchain. Anyone can verify trades, fees, and liquidity pools in real time. No hidden fees. Banks charge hidden fees for loans, transfers, and account maintenance. DeFi shows all costs up front, ensuring fairness and transparency. Smart contract security. DeFi transactions are automated using smart contracts, which execute without human intervention. This reduces fraud and ensures fair transactions. Example: If you stake tokens in a DeFi pool, the smart contract automatically distributes rewards. No middleman needed. With open, secure, and verifiable transactions, DeFi eliminates the trust issues that exist in traditional banking. How to make money with DeFi. Want to start earning with DeFi? Here are the best ways to generate passive income. 1. Yield farming and liquidity mining. Instead of holding idle crypto, you can provide liquidity to DEXs like Uniswap, PancakeSwap, or SushiSwap and earn rewards. How it works. Deposit your crypto into a liquidity pool. Earn a portion of the trading fees plus extra rewards in DeFi tokens. Example, if you provide ETH and USDC liquidity to Uniswap, you earn rewards every time someone trades between these tokens. Risk warning. Impermanent loss can reduce your profits if token prices fluctuate significantly. 2. Staking and lending. DeFi lets you stake crypto to earn rewards or lend assets to borrowers. Staking. Stake tokens like ETH, Matic, or SOL in staking pools. Earn 5%, 20% APY in staking rewards. Lending. Lend crypto on Aave or Compound. Earn interest payments from borrowers. Example, staking Solana SOL on a validator node can earn you 6% plus APY. Lending USDT on Aave can give you 5% plus APY. 3. Buying and holding undervalued DeFi tokens. DeFi tokens often explode in value once they gain mainstream adoption. Top DeFi tokens to watch: Uniswap, UNI, leading decentralized exchange; Aave, AAV, top lending protocol; Curve, CRV, stablecoin liquidity provider; Strategy, research undervalued projects early, buy before widespread adoption. 4. DeFi arbitrage. Since DeFi platforms are decentralized, prices for the same asset can vary across exchanges. How to profit. Buy crypto cheap on one exchange. Sell it higher on another exchange. Example, if ETH is $1,800 on SushiSwap, but $1,820 on Uniswap, you can buy on SushiSwap and sell on Uniswap for a profit. 5. Participate in DeFi airdrops. DeFi projects often reward early users with free tokens. How to get airdrops? Use new DeFi platforms early, provide liquidity, stake, or interact with smart contracts. Example, Uniswap airdropped Uni tokens to early users. Some made over $10,000 for free. DeFi risks. What to watch out for. 1. Smart contract bugs and hacks. If a DeFi platform has weak code, hackers can exploit vulnerabilities. Solution. Only use audited DeFi projects with strong security. 2. Rug pulls and scams. Some developers drain liquidity pools and vanish with investors' funds. Solution. Stick to trusted, well-reviewed projects and do your own research. 3. Impermanent loss. When providing liquidity, price swings can cause unexpected losses. Solution. Use impermanent loss calculators before investing. 4. Regulation uncertainty. Governments may try to restrict DeFi in some regions. Solution. Stay updated on crypto regulations to avoid legal issues. The future of DeFi. What's next? Mainstream adoption is growing. Traditional finance is slowly integrating DeFi concepts. Big institutions like BlackRock, Goldman Sachs, and JP Morgan are eyeing decentralized finance. DeFi 2.0, smarter, safer, more scalable. New projects are improving security, user experience, and efficiency. Layer 2 scaling solutions like Arbitrum and Optimism are making transactions cheaper and faster. AI plus DeFi. The next big thing. AI-driven trading bots and automated smart contracts will revolutionize decentralized finance. Imagine AI managing your DeFi portfolio, optimizing returns 24/7. Decentralized finance is the future of money. Whether you're an investor, trader, or someone looking for passive income, DeFi is a game changer. Want more DeFi insights, strategies, and crypto trends? Subscribe and turn on notifications. Let's ride this financial revolution together. Follow us on X, YouTube, Medium, Instagram, and Threads at True Crypto Insights and Crypto Tribex for podcast.